This is Chad Stayskull with Eagle Wealth Management. I'm here with our July 2017 Educational Economic Update. In this video, we're going to talk about some of the economic headlines that influenced markets in June, and I hope to give you some insight into what they could mean for you as an investor. Well, June 30th marked the final trading session not only of the month, but also of the first half of 2017. It's a period marked by strong stock market returns and exceptionally low volatility. And despite the ongoing conflicts in Washington, Wall Street is still in rally mode. Stocks have been lifted by the sense that other global economies, particularly in Europe, are starting to stabilize. But not all stocks have risen through the first 6 months. The S&P 500 telecommunications sector, which includes phone and internet providers, as well as the energy sector, including oil and gas companies, were both down. The U.S. gross domestic product, which is the total value of goods produced and services provided in a country during 1 year, increased at 1.4% annual rate during the first 6 months of the year. Job growth? It has been steady, and consumers are feeling better about the ability to pay their bills, take trips, and cover other expenses. Consumer confidence rose in June, and experts say conditions are good for economic growth to continue. American personal income soared in June, but that extra cash didn't seem to prompt consumers into spending. The latest reports suggest consumers are being frugal once again, and despite their pay increases, are not spending it. What can we expect from the markets over the next 6 months? Well, looking into the second half of 2017, analysts believe it's unlikely low volatility will persist indefinitely. Investors may need to brace for more big swings up and down in the coming months. Wall Street will be focused on whether corporate earnings can continue rising in a healthy pace despite what's going on in Washington and around the globe. Wall Street professionals say the best days for the stock market this year may have already occurred. This might stall future gains as markets that have become too expensive, have too much political gridlock, a slow-growing economy, and worries about top-performing stocks cooling off might slow down. There's also a feeling that the market's fast start has stolen the gains that might have come later this year. Interestingly, consumer attitudes hit its lowest level since November 2016 with all these big ups. Economists expect the measure of consumer attitudes to fall even more in the coming months. Consumer attitudes soured in June as U.S. consumer sentiment slid to a 7th-month low. Though still rising slightly, the economists' expectations are still holding historically high in the first half of 2017. Well, that's it for the July Educational Economic Update. Please remember, nothing we talk about here is a recommendation. As always, if you have any questions or concerns about what you've discussed or what we've discussed, please feel free to give our office a call. We're happy to talk. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of July 2017. Take care.